All right, so we are here. We are live, and tonight's is a part two session from last week when we were here together. Thank you for joining me tonight. Got a lot of exciting things to go over today because this has been a heck of an earnings week, man. And you talk about taking the thread through the eye of the needle. We did that on a bunch of trades this week, and I'll go through all the details and how the indicators that we were sharing with you last week, how they had some pretty good insights on what to do. And directional movements in the markets because they were, and there was one, I got to tell you, one in general, I have the understatement bearish neutral. Just remember that term, bearish neutral. It's the understatement of the week. In any event, please take a moment to just briefly read through this, that this is educational in nature and past performance is not indicative of future results. Trading involves risk of loss. So we started this 2-week session, free session, to try to get people familiar with the work and also what tools are working. And we have our indicators on multiple platforms. So many of you are familiar with Thinkorswim, of course, TradeStation. We have Genesis, Trade Navigator, Wealth Charts now, HGSI. So there's a broad base of our work that's been on a very few select platforms and broker dealers. So that's it. We don't do a lot of selling of our indicators out there, and quite frankly, I don't come up with an indicator a week, and because quite frankly, my pitch is very simple. I do the same thing over and over again because I don't change because it works, and it's not the definition of insanity. It's the definition of if it ain't broken, don't fix it, and that's what we have going on. There's a couple things that we like to use, and it's non-correlated indicators that give us a little bit greater confidence. And the first thing that we talk about is, as we did last week, and just as a quick review, and I want to go over some of the highlights from last week's presentation because it wasn't recorded and a lot of people were, well, bummed out. And so I said, I'll just go through it real quickly tonight because I think it'll come back and it'll be covered and it'll be on a video, and tonight's video is up and running. So it will be this presentation you will be able to review. And I think you're going to want, without a doubt, to review tonight's session. No doubt about it. Because tonight we're really going to get into the devil of the detail of volume analysis and also combining for stock trading and option trading, why that relative strength, the PMC indicator, is so powerful. So without much more ado, let's get into it. Except for this, many of you are familiar with my work. The book that started and launched the whole thing with candlestick and pivot point trading triggers and popularized pivot analysis, and then again, now that people started to see that I might have been on to something, was that book right there, Candlestick and Pivot Point Trading Triggers, and that's the second edition. The first edition came out in 2005, and I don't say this enough because I keep forgetting, but in 2005, I was the first person to come out and back test a couple patterns of candlesticks, and what it was the high and the low closed doji. And that high and low closed doji had unbelievable backtest results. And it wasn't done by me. It was done by none other than a gentleman by the name of Pete Killman, who worked for Trade Navigator, which is Genesis from Genesis Financial. So all those details were in that book. It was pretty cool. I've been around a long time, and many of you may not know this, but it's funny. I was at a conference speaking in Miami at the investment conference, and I said I work for George Lane, and everyone was like, yeah, big deal, who's that? I said, you probably use the guy's indicator. It's the one called stochastics. And oh, yeah, sure. So the guy who created it, it's kind of like, where's my life gone and how fast has life gone by us? And just going back and just remembering all these great technicians of my day and age. And George had a lot of influence on me and still to this day. And you see a lot of maybe what he would say resonate coming out of my mouth, like overbought, oversold, convergences and divergences. And we're going to show that tonight in the volume tool, by the way, because we had some really powerful setups this week that just knocked the ball out of the park, no doubt about it. So many of you are familiar with a lot of my private proprietary trading tools. We have the PPS indicator. It's an arrow that points buy and sell signals on triggers. Thinkorswim, many of you are familiar with Thinkorswim. It's the PPS indicator. This is wealth charts, and it's slightly different. You see the wider of the moving averages, so it's a little bit different of a variation, but very similar. The other indicator is, of course, person's pivots. And person's pivots, if the market's in a bullish mode, projects a higher high and a higher low. And you will see that in tonight's presentation. I'll definitely make sure I mention that. One of the more common concepts about the pivot is if we're in a bullish mode, if the market's supposedly bullish by the end of the session, if it's projecting a higher high and a higher low, if the market's truly bullish, prices should be generally trading above the pivot point in a more bullish market environment. So we'll cover that in just a minute. Of course, there's the volume momentum indicator, and that's one that's a highly powerful, it's incredible tool. And in the absence of these proprietary tools, one may use on-balance volume from Joe Granville. The fourth and final price-based, or not quite price-based indicator, but the other indicator I use is a relative strength tool called Person's Market Catcher. And for stocks or ETFs, it compares within one of four stages of the market. Outperformance, which is bright blue, still leading the market but weakening, starts to turn dark blue. So if you're long and the market starts to kind of lose its positive thrust or gain of momentum, you'll start to see the histogram turn with lower bars, and it turns color by going dark blue. And dark blue means it's starting to lag, and that means it's losing its positive bullish momentum. If the third stage is it's weakening against the overall market, and that's red. So if you're long and you see the relative strength turn red and it's totally going down against you, this is not a good sign. This is a liquidation mode. And then the fourth and final stage is when it starts to improve. Prices is starting to improve relative to the S&P 500. And I just thought I'd mention those four stages because they're very important in the market. So I said that I was going to go through rapidly at the highlights from last week, which wasn't recorded, so I'm just going to get right into it. Person's pivots, what makes it work? What makes it tick? There's a moving average approach to the person's pivot indicator. It's kind of like a long-term versus a short-term moving average, and it filters out, if the market's bullish, it paints a picture on the charts with the horizontal support and resistance line. In a bullish market, it should project a higher high and a higher low. In a bearish market environment, it'll project a lower high and a lower low. But the pivot point itself is the typical price in what we call the high-low close, and it's divided by 3. So if, let's say you're looking at whether time frame it is, the end of day. So if it's Monday, the market closed, and you want to know, hey, what's the condition of the market? The essence of the formula is you take the high, the low, and the close, divide by 3, and that's your typical price for Tuesday. And that would be the pivot point, and that's what we consider the typical price, the pivot point. So in an extremely bullish market event, if Monday the person's pivot filters out a condition where it projects on the screen in the future, so on the close today it would say, well, for tomorrow, for example, if the market rapidly changed from bear to bull, it's going to paint a higher high and a higher low on the chart. If the market truly is bullish, prices should stay north above the blue line, the pivot point. So that's what this first bullet point means. In an extremely bullish market condition, the pivot point becomes the target low for that trading session, or inversely stated, price should be above the pivot point. The opposite is true in a bearish market condition. So if it's supposed to be bearish and you're selling, and all of a sudden the market all day long is starting to trade north and above the actual pivot, that's a dynamic that's changing, and that's an observation traders need to adjust to, that market condition is changing. So that'll give you your first clue that maybe you tighten up stops if you're short, or perhaps start looking for maybe some bullish trade signals. So this is a really, I guess it spells it all out. If the market's truly bullish, we should be seeing the blue-gold relationship. The short-term pivot point blue is above the longer-term pivot point moving average, which is gold. When a market trades down to a pivot support, if it's truly bullish, it's going to go back above pivot. And one of the things that I teach people and have taught for years is that if the market's truly bullish and you get a buy signal, then you want to look for buy signals above the pivot point. And if the market's bullish, like in this case, price stays well above the pivot during the day. If it goes down to support, you can look for some other mitigated indicators. Bullish volume conditions. You'll look for maybe improvement in relative strength. And one trade, as we sent out in the email invitation, was Tesla, because we had a great trade in Tesla. And Tesla did something very interesting this week before earnings. It came all the way down to pivot support. And as bearish as Tesla was, I mean, what, they lowered prices on model cars before their earnings. I mean, everybody was just selling this thing out and, hanging Elon Musk out to dry because nothing was going to happen. But we'll show you the slides later in tonight's presentation about volume and candle patterns and how when you get near a support, now sometimes this is very important to listen to. Sometimes the markets go down to a pivot support. They don't stop it's an area. Sometimes we're unfortunately exactly 100% correct and it stops within a couple ticks. But sometimes it's an area of support and it probes that target level. What we're looking for is, what is the condition of a market? If it's supposed to be bullish, is there heavier volume on the low? Is it starting to get weaker? Are you starting to see more bearish candle patterns? What is the characteristic of the market when it gets near a pivot support? In this example, we have a dark candle, next candle's up, down, then it's back up, and then it just blasts off. Now, we don't have enough information on this chart like added volume, but it's a great example of how more times than not, if we're supposed to be in a bullish environment, watch for the market to get to pivot support and look for bounces off of pivot. But more importantly, if the market's also bullish, wait for prices to get back north of that pivot point, which is that blue line. This is definitely, I hope, recorded because I teach this at live seminars, bottom line, because this is a powerful approach to using pivot points correctly. It's one thing that I got a tool. Well, how do you use it? Well, here's a 5-pound sledgehammer. What do I do with this? Put a couple nails in the wall to hang up a painting. You're going to put a hole through the wall, right? You don't have the right tool. So bottom line is you got to have kind of like the right tool and understand how to use it. A hammer's good, but make sure you got the right hammer. And with pivot points, I mean, people use them as an absolute, like I'm going to buy the low and I'm going to sell the high. And quite frankly, that's a wrong approach. They're one of the best leading price indicators out there in this world that I have found by far. And we've just got to make sure that if you're looking at better tools, that you understand how to use this more correctly. And one of the ways is that I teach, and I'll share with you tonight, is that you got to have other indicators or maybe something else that gives you the trigger, a PPS buy signal, or maybe a good volume indicator behind that. Or this right here, which is relative strength. And so when you're looking for a stock trade, the PMC indicator also is a phenomenal tool. So whether something correlates well with the S&P 500, and I'm not going to tell you that the Japanese yen futures correlates with the S&P. It might have an inverse relationship, but it's not directly. So there's certain things that you want to say, I'm going to use a tool and know when to apply it. And so the topic in this particular section here is using relative strength and the PMC indicator. And basically what this tool suggests is that we're looking at the percent change of one product compared to the S&P 500. Now you can also, someone asked, I think this question, and I want to make sure it was, if it wasn't in this session, it was another session, someone had asked, can you use it with other ETFs? And the answer is absolutely yes. The only thing you shouldn't be using and can't use the PMC relative strength indicator for is if the common denominator is the S&Ps, you can't compare the S&P to the S&P, right? You can't trade E-mini S&Ps using that tool saying, well, how does it relate to the SPY or the SPX? It's not going to work. But you can take a look at the relative performance of the Russell to the S&Ps, the Dow to the S&P, or more importantly, the NASDAQ 100 to the S&P. And that's a kind of a powerful tool to use, that if you think the NASDAQ is underperforming relative to the S&P, then you want to be maybe not taking longs in the NASDAQ 100. Usually the NASDAQ 100 will be stronger than the S&P because of the technology cap weight effect. And that's what's taken place over the last few years, or taken over in the last few years. That's why they call it the MAGA 8 or 7 names, so to speak. Now, I'm breezing through this because we covered this last week and it was not recorded. So if you're new tonight and you didn't attend last week, I think it'll come to you as soon as we get to some of the charts. I just wanted to make sure that we got these slides in there, especially to cover that topic. The relative strength lines, remember, has 4 concepts with PMC: good, bad, best, and worse. And what does that really mean? A lagging weakening stage is when the histogram turns red. That's bad. If you're long and the histogram turns red and starts to trade below the 0 line, that's a negative performance. And so I think in the next slide, it clearly will show this. So you can see the 4 colors here. You have fuchsia, red, light blue, and dark blue. So whatever program you have, if you have Thinkorswim, guess what? It's going to show this. If you have TradeStation, it's going to show this. If you have Wealth Charts, it's going to show this. If you have Trade Navigator, does not have the PMC installed on it. So just those 3 platforms have the PMC indicator on it. So what does it signify? Well, if a stock is going higher and it's breaking out, and this is what I think in this market environment, it's a very tricky market. And I think this year, a lot of people, it's a very different structure than maybe last year, right? I mean, let's face it, last year at the beginning of the year, Meta was near, what, $100 at the beginning of last year, 23, not 24, 23. Last year in March, the world was falling apart. We had Silicon Valley Bank. There was all these regional banks going to go under, if you remember that. It was a different structure. The Federal Reserve didn't know if they were going to tighten, loosen, come or go, right? And then all of a sudden, there was going to be a recession. There wasn't a recession. And now we're in an election year. It's a total different ballgame. And we're accustomed to this new thing that came out, which wasn't really new, but a new thing came out, or at least a company announced in May that it was revolutionizing the whole technology world. It was called artificial intelligence when NVIDIA released their earnings. And that set the stage on fire since then, right? So artificial intelligence was the big buzzword. It's interesting that you don't hear about virtual reality anymore. And it's just, now it's all artificial intelligence and inflation. That's it. What's going on in this world? Is the Fed going to cut rates? Well, no, not now. Is inflation coming down? It's a little stickier, but are companies making money? And that's the key. And people are making money in this environment. Not all, but a lot of companies are making money. So what's the difference between, as an example, look at the airlines. Love, which is Southwest Airlines, ooh, no bueno. But Delta, no problem. So it depends on the airline and the airline carrier of who's doing well and who ran the company better and who does not have as much debt structure. And that's I think, the bottom line in this business, that companies that are making money, that are giving great guidance and going forward, they're getting rewarded. What happened, and we're going to cover this because one of my this week's trades was to actually be bearish, and my call was bearish neutral on Meta. It was the understatement of the year, but we had a position on an option that we benefited vastly from, so it was fantastic. And the indicators help guide us to sell short or be on a bearish trade on Meta for an options position in the live trading room. We actually had that texted out and sent to our subscribers. What I'd like to point out to you is that it was this tool here that helped alert us that what was going on with Meta. But what was the real issue with Meta? They're going to spend a lot of money because Mark Zuckerberg said, yeah, I'm going to spend a lot of money on this artificial intelligence, and we might not get a return on that investment for a few more years. And the market really didn't like that. But listen carefully. if you knew that today or last night, that's why this morning we walk in and we saw Nvidia was up, AMD was up a little bit. It wasn't a full-blown market crash. It was a few names got really down and dirty, namely Meta, because he's still going to spend a lot of money on artificial intelligence. So that was more of a fundamental analysis by listening to that. But the indicators here, it was weird. The indicators helped us to identify that, because just like this page right here, I want you guys to study this. You see where it says divergence warning? A stock that goes up and the relative strength is weakening. See these subsequent highs, these blue bars? They're lower. As each subsequent high gets higher in the stock, the bars get lower. That tells you something is wrong. There's a disconnect between the performance of the stock to the S&P 500. And when it starts to turn red, be careful. Something bad's coming down the pike. And that's exactly the same pattern that you'll see in just a few minutes with Meta. We'll go over that. Now, inversely, we talked about this, and I want you to look at just this little trend here from 1023 to 11.6, and you can see this chart. Now, this is Thinkorswim, so if you get Thinkorswim, you just go to add studies, go to John Person, find my name, and then put the PPS, and you'll get this exact moving average with these signals, buy and sell signals. Sell signal, market goes down. Buy signal, market goes up. But also add the PMC indicator, PMC. Now, if you'll notice here, the price is going down. Gives a sell signal. Hey, pretty good. Market went down next day. Went down some more. Had a little dead cat bounce, and it sells off more. And you can clearly see that the red candle which signifies just that the market closed below that open. That's what a red candle signifies. And you'll notice that the path or the trend is down. So if the market is down, I'd like to, you need to ask yourself, what is the undertone indicator suggesting? Well, the price of the structure is down of this instrument, or the stock, or the ETF in this case. Notice that the relative performance is getting less bad. It's getting less bad in the fact that the histogram's turning, moving less lower. In other words, the bars are going higher, and the color changes. It goes from dark red moving down to fuchsia going up. So what's the condition? The condition is the market moved lower, but the relative performance was starting to outperform the S&P 500, and you get a buy signal. Now, what's the magic behind this? The magic is simply this. Fund managers and everyone's looking for positive momentum. Nobody likes picking bottoms, and nobody wants to sit around in a trade for 4 years before it finally decides to lift off. We're all greedy pigs, and in this society, there's more greed than you can shake a stick at, I guess. Either that or everyone's just absolutely trying to chase performance faster than you can just blink. And in this case, when you start to see a stock moving lower and the relative strength's improving, it's kind of like a bullish convergence setup in the sense that you know something's getting ready to rock and roll. And when you start to see that magenta or fuchsia color start to improve, that means that the market's entering a strengthening stage. And then all of a sudden, bright blue and the thing fires off and it just takes off like a bat out of hell. Now, as it rallies and you start to see the market get near the highs, what do you see that's common denominator from the last slide? The relative strength starts to move lower as the price is moving higher, and you're starting to turn more negative and red bars. So sell signal with weakening relative strength is not good to be long. It means tighten up your stops or maybe take some protection to the downside. So the PMC indicator helps uncover hidden strengths in the market and hidden weaknesses at tops. So again, convergence patterns. When you get market that makes newer lows, and it might be frustrating, but that's what the market does. It frustrates you, and you shouldn't get emotionally frustrated. Think of it as like a video game, right? Because I mean, literally, sometimes trading, it's a battle between the wits of bulls and bears. There's all kinds of forces in there One guy a fund might not like it. Someone might have stops under the market. They know that when they probe the lows, they go down, they shoot straight back up. But if the trend is moving lower and the relative performance is improving, underneath, it's like a hidden strength meter. Underneath, something is dramatically changing. If the market's near a high and the relative strength is weakening relative strength at highs means the market's vulnerable to decline. If the weakening price structure is going down and the relative performance is improving, it means the market's vulnerable for a liftoff. And those are the types of patterns that I would like that you should be focusing on for any type of trading and scanning. Now, this is where we left off, and I wanted to make sure that I covered the pivots. I wanted to cover the relative strength again and have that on the recording. And now let's talk about what we were supposed to be here for tonight. Let's see. Gerald asked, what is the timeline? You can see here, this is a 1-year chart. It's a daily chart, Gerald. Gerald, I didn't see your question a few minutes ago. I was busy on the presentation. I did not see your question. I hope you see that these are all daily charts. And you can, AIG, these were daily charts. And you can use intraday, weekly charts. You can use 1-minute charts if you really wanted to. I don't use a 1-minute chart for trading stocks personally, but it does work in that fashion for short-term trading. So the PMC, if you're into stock trading, okay? Does the PMC, is it an appropriate tool for day trading E-mini S&Ps? No, I think there's a better tool, and it's a volume tool personally, and that's what we're going to talk about. I hope that helped answer your question succinctly. In lieu of any other volume tool, Joe Granville created this tool, and we actually have a moving average. It's called on balance volume. Many of you are probably already familiar about it. I went back in the old days after the first release of the book in 2008 and 9 and 10 and did a bunch of road shows for Thinkorswim. And we went out and spread the gospel and the good word, so to speak, on balance volume. And it became extremely popular to the point where I think they even put up a special scan on, I think David Kears was his name, I think, if I remember correctly, and they called him Mr. ThinkScript. And he put up an indicator of OBV using my moving average approach. So you're able to actually scan for a PPS buy with improved volume using OBV. It's quite an efficient tool to say, hey, I want to go for, give me a buy signal. If the market's supposed to be bullish, it should be trading north of the pivot point, the blue line, right? We just covered that. But if it's trading north of the blue line and you got improved volume, that's even an added bonus. So when you get buy signals, or more importantly, let's say you get a sell signal, you say, oh, John, the stock's turning bearish, is just because you got a price print of a sell signal, yeah, the market went down, so the sell signal was valid because the market went down. It did. It just, as you can see, went down. Did it stay down? No, it actually went right back up and supported and closed greater than the pivot point. What was the condition of that downdraft, updraft? Well, it seems to me that the volume is still in an uptrend. So what's the condition? And that's the key word that I think everyone needs to focus in on. What is the condition of the price? Did it go down and stay down on heavy volume trend, or did it go down and get kicked right back up on supporting volume? Well, John, you need to tell me what supporting volume is. Supporting volume is, did the volume indicator make a higher low or a higher high? Did it move lower? And the answer is no. In fact, it actually went back up into a buy signal with improved volume trend. So the on-balance volume is a very powerful tool that helps people understand what the volume condition is. Now, there's a little bit more trick to the trade here. And one of I would suggest to look at from the close to the close in this 1, 2, 3 bars. If you look succinctly here from this point to that point, that distance of trend of volume is pretty substantial. In the 1, 2 bars went down, the volume came down, but didn't take out the swing low from where this started from. So you can actually look at the volume and say, gee, We got to pull back. It looks kind of ugly a little bit, but the volume trend is still in an uptrend format. And that, I think, it may be a little too technical for some, but I'd rather be too technical and succinct and be more efficient in this marketplace than not, because mistakes in this business cost serious money. I mean, think about all these earnings. I mean, if you're on the wrong side of some of these moves, it's painful for people. And I think if you can get an edge, and that's the key word, listen carefully. If you can get a more efficient edge, you're going to have a better time trading. And if you can understand that you're not going to be right all the time, so no matter how great my stuff is, and no matter how great I think it is, and no matter how great the results have been in the past, at times there's been some bad times too. And you've got to adjust and make sure that you're not like, hey, these signals work every single time. Let me just get my whole family fortune in this one trade. We have an old phrase from the old days on the floor, and it went like this. Whenever you're wrong, you're always in 100. Whenever you're right, you're always in 1. What's the point? When you have that conviction in yourself that you can't fail, you go all in. That's the one time things don't work. So nothing is 100%. We're looking for a great edge. So we have to respect the market. You have to respect the fact that, yes, people can and do make money. Even though the government needs me to say people can and do lose money, people can and do make money. What happens is I think people get the wrong I don't know if they're over-positioned, they over-trade. There's all kinds of reasons why people can fail. But if you can learn to be picky and choosy on your trades, I think you're going to have, and rely on a few just fantastic non-correlated indicators that make sense, you're going to do a lot better in this world, especially in this environment. So let's take a look at the good news on the way up. Now let's look at the bad news on the way down. Here's a funny thing. This is called a bearish divergence. We made a new closing high. Don't look at this red because it closes down there. But this market closed higher than the major previous swing high. Market made a high, it pulled back and went up, the highest peak high. If you take a look at the volume when this market made a new high, and then the volume came down, and then the market readjusted, and it exploded to the upside, how's the volume here? Is this now, a lot of people might get trapped in thinking, oh, it's a confirmed breakout, I got to get long. And the problem is, it was probably a bear trap because there was no extreme volume supporting the rally. If the market was truly breaking out, the volume would have been leading like it did over here. It reset, it went and tested the high, it penetrated the high, but it didn't attract new longs. It's a bearish divergence. Newer highs in price with lower high in volume does not support the new high. So if you get a new high in the market and it's not with new volume or better volume trend, it's a trap. You want to be careful of that. And that's where the volume on using either on-balance volume works well. Now, I have created a proprietary momentum volume indicator. And basically, it's like a diffuser that tracks the difference of change in the momentum of the volume. It does so in a histogram bar. So if the market's getting ready for a buy signal, the volume trend goes higher. If the market gets to a new peak and the momentum of the volume starts to wane, that's not a good sign. When the market goes to a new low and the volume, as you can see, market goes down, look what the volume histogram is doing. It's rising. So this isn't predicated on price, this histogram. This is predicated on the volume changes. And so that tells me, is there heavier selling on the way down or lighter selling? Even though a market makes a newer low, if the volume is getting lighter by nature of the histogram improving, baby, this is getting ready for a pop. And that's when you start to see the ebbs and flow of the market. Now, if Gerald wanted to ask what's the time frame of that particular chart, this is the volume indicator. This is a crude oil chart, 15 minutes, and this was from November 23, just earlier last year. So we have a couple things to look at. I'm going to share with you what we just went over, and this is a stock, a daily chart on Hormel of all things. And I find Hormel back in college days, probably a college student's with a 6-pack of Coors beer. I don't know why Coors, and a can of Hormel chili. That was a great night for studying, right? With premium saltine crackers, because Hormel makes the best damn canned chili. I don't recommend it now. I'm a little too old for it, but we'll just let fond memories be fond memories. That's it. But Hormel, I'm not. I don't really get picky and choosy what I trade if the setup's right. Markets that tend to make newer lows get my attention. And if you notice, this is the person market catcher in the middle. If the market makes a new low, and you can see the closing lows in here are lower than the closing lows at the prior swing low. Can everyone see that? I mean, I'm not making that up. I mean, it's pretty clear that if you were looking at a chart and you say, oh, this thing's going down, it made a new low. And you take a look at the relative strength and say, why is the relative strength not weaker? Meaning, why aren't these histogram bars like really weak? Like this made a new low from that low, but the histogram was lower than this. And what happened? It had one more downdraft in it. When it makes that one more downdraft, but the relative performance starts to get improving and shows a convergence, it gives you a stronger setup. So for stock traders, you want, what is that indicator telling you? It's saying that the performance of the market is starting to lose its negative momentum relative to the S&P 500. Okay, that's a powerful setup right there. It's got nothing to do with price. It's got a comparison percent change of that product to the S&P 500, right? It's a different way of analyzing the market. It's like a hidden secret internal signal. And the next thing you would look at is, this is Joe Granville's on balance volume, says so, it's clearly marked, but it has that moving average, which is the dark blue line. Should be reversed, but we did it for, illustrating purposes. But if you notice that the on balance volume starts to improve and starts to rise, as well as when you got that PPS buy signal, you've got improved relative strength, a convergence. Now, maybe you don't want to buy it here, but you certainly aren't selling it, and it's getting your attention day by day, and you may want to put it on a watch list. But more importantly, this is my volume indicator. And basically, looking at that percent change of the volume kind of concept and the momentum of the volume, look what it does. It actually highlights a stronger bullish convergence in the sense that this moving average approach and that histogram is a lot higher of a low than way over here. Whereas on balance volume, it kind of doesn't have that same appearance. And the histogram really highlights that net positive change that people were starting to come in and buy right into the low, not later like on balance volume. So it was a little bit earlier of detection. So, I mean, somebody out there, and I'm pretty sure I don't need to convince anyone that's in this presentation tonight of this. Somebody in the world has better information than John Person. Somebody might have information in the hedge fund world that knew somebody at Hormel, that knew somebody was going to buy stock in Hormel, or somebody out there in the world knows more than John Person. And that's where that volume starts to show up, the real reflection of buying coming into the market. And that's all this does, is help to indicate that buying is starting to come in. Whether it's Warren Buffett at Berkshire Hathaway starting to buy stuff, whether they're buying it and every dip they're buying and buying and buying and then finally get nuts on it. I don't know who it is, but the indicators help support that, right? So I want to go through a couple things from what we've covered today. Person's pivots, volume indicator, relative strength, PPS, buy and sell signals. What did we do for this week? In our live room, not only did we do this, but these are actually the actual texts that went out. Ways to trade the market and the signals that were set up. So let's take a look at them. We had Tesla. Who in their right mind was going to look to be bullish Tesla? Now, with implied volatility, many of you, raise your hand, give me a number 2 if you're an option trader. Give me a number 2 if you're trading options. Thanks, Gerald. Boris, everyone, thank you. Great. So we all know higher implied vol is making options expensive. So when you're trading in the market, you want to try to get the most, what I call the most bang for your buck. Maybe directional outside options is a bang for your buck. A lot of people are non-directional trading. My work has always been more directional. So I tend not to do things like in a high IV market. I tend not to take just, the playbook is to sell some iron condors, which is selling an upside call spread and selling a downside put spread outside of maybe the implied move. So if you're thinking the market's going to only move 8% and you sell upside call spreads and downside put spreads and the market moves, say, 15%, you're going to have a financial issue. It's not going to be a good trading day. I'm not that good to dictate that, generally speaking, but I am at times. I do have a little bit of talent in directional indications, and because of implied volatility, I have ways of knocking down my cost structure of getting into a trade. It may limit my potential reward, but it gives me at least a structure to trade off of, and I kind of mirror the different trading options. So in case anyone didn't know, I started trading options in 1984 when they first introduced on Treasury bond futures at the Chicago Board of Trade. So I've had a lot of experience and been around a long time for options trading. So bottom line, there are some of my even students that probably can give classes on. They've gone to so many different option classes, but there's I always believe there's a certain strategy for every opportunity under a different condition, because some markets have higher IV, which is implied volatility. Some market movements might take a little bit more time, and so I can't take something that would be immediate. But this particular week was interesting. We did a Tesla. I generally don't like to do just regular balanced butterflies, because if you're wrong and the market exceeds a move, you don't get paid. So I like to add a little bit of risk to the trade and do a lot of what we call broken wing butterflies. And basically it just suggests that if the body of the butterfly, in this case a double nickel 155 call, you sell two of those, you buy one of the 149 wings, and you 157.5 calls. You'll notice that's $2.50 difference to that side. And look at from 49 to double nickel, what do you got? $6. So if the market exceeds all of that, you're going to get more money than you pay. So that was on Tesla. Nobody in their right mind was looking to buy Tesla. We did. I'll share with you why in a minute. Meta. Nobody in the right mind saw Meta going down except for we did. But this was the worst call, probably the most bonehead call of the week, because I said it was bearish neutral. We were looking for a move to maybe exceed, and you'll see from 475 to 460 is 15 wide, and from 60 to 50 is 10. So that actually worked out really nice, because, man, it really, as you all know where it ended up today. In overnight session last night, it was down to, I think, the intra-night low. I forgot if it was like 408, 406, something like that for a nanosecond last night. I think it was around maybe 6:30 p.m. last night in the extended hours. Meta traded down there. The other one was looking at the Qs, but this was a twist. So I said, listen, on Meta, if it goes down, if I'm right and it goes down, it's going to drag the Qs with it, because we have a mildly bearish sell signal in the Qs. So I said, maybe you want to do a bear put spread on the Qs, and if you want, you could kind of take a little butterfly on Meta, but trade that on a negative bias, because if Meta goes down, it's going to drag the Qs with it. We covered that position today, by the way. Microsoft, this was one we put out today. So tomorrow morning is going to be fun. Microsoft, May 3rd expiration of 407. Now, this was different. A 407.5, 415 bull call spread. I'll go through exact details of why was that a bull call spread and why did we select those particular strikes. And then the worst trade of the week, but it's going to be painful. I wasn't comfortable with it, and I thought, you know what, guys, Intel, and I'll share these charts with you based on what we learned tonight. I went with a May 17th. So look at the expirations. Immediate work for Tesla, immediate work for Meta. We're out of this trade on Qs, doesn't matter. It was a profitable trade. Microsoft, May 3rd. Who cares? It's going to be, I think at last I checked, it was at in the post market. What was it, at 18 or something of that nature? Double check. Microsoft's at 416.69 now. That's okay. So it's It's intrinsic, both sides. Beautiful. Intel, though, I went with a May 17th expiration. It was at the money or in the money by like 4 cents. And I think we paid $1.04 for this. I go, I'm not too happy about this, but in at the money, doing the 35.39, risking a buck, we kind of had some good trades on to make maybe a 1-to-4 risk reward ratio. And I went with a longer duration just in case there was some funkiness, and we got PCE number tomorrow. You got monthly unemployment report next week. And I think there's an announcement of maybe a CHIPS Act fund disbursement coming out. I'm not sure if the CEO of Intel is just the world's village idiot or if he's just a complete buffoon. I haven't figured it out yet. And I knew better than to do this trade, and I'll be honest with you, on an open mic, I shouldn't probably call a CEO of his stature and contribution to technology a buffoon. But in the last earnings call, this is the guy who said, we're not selling chips because there's not a lot of demand for semiconductors. Meanwhile, NVIDIA is trading at like $900. Super micro computer goes from 400 to 1,000. AMD's up to 185. And this guy can't sell a single semiconductor chip. So what he meant to probably say was nobody wants to buy our crap. So, I mean, that's the truth of the matter. And it still resonates to this day. I'm sitting here on a computer. I tapped on it with a Core Intel, chip. So Dell computer, by the way. So I know they sell chips, but they can't really, the guy just can't get out of harm's way for whatever the total reason is. So the moral of the story is Intel was down, bad earnings report. So let's take a look at some of these charts. So this is Intel. We're just going to start with the dumbest ass thing I've done all week. The market went down. The relative strength performance was dark red, but the volume was improving. I go, maybe it could come down a little bit, but it probably could come back and test maybe into this pivot or this old level of support resistance, nothing more. So I thought from 35 to 39 on a bull call spread into May 17 would work. I just wanted to point out to you an example of where it wasn't a textbook picture perfect trade. A textbook perfect picture trade would have been more like the momentum of the volume turned green on a buy signal and the relative strength was blue. But I thought it was okay, worthy of a shot of a 1-to-4 risk reward ratio, which we already had a good week on. So that's the explanation. So I would say that on this recording, if you want to go back and say, okay, how do I set my charts up like John did? And you come back to this recording. You just want to make sure that the next time you take a trade, make sure you're looking for a buy signal and it looks like this and not so much like this, okay? But that's where an option strategy, and we have a defined risk, and I've got a little bit of time, and generally what I'll probably do, because it's a 35-39 four-wide strike bull call spread, I'll probably see where the market is tomorrow or maybe Monday, buy back the 39, and if we do get a dead cat bounce, I'll either sell the 30. I'll do some kind of a either get out of the 35 on a dead cat bounce, or maybe I'll sell a 36 against it, narrow the spread just to cover majority of the loss. It won't be a huge deal. So I mean, those are the concepts. The problem is it did not go up, and it is going to take a little bit of cerebral thought. I won't give it a whole lot of thought, but it is going to have to be something I have to watch until because I'm in it. So if anything, it's a waste of energy and a little bit of money. But here's the really good thing. This is Tesla. This is monthly person's pivot points. Monthly. And that's one of the keys that I think a lot of stock traders miss. If you're using pivot points, let me ask you this. Not daily, not weekly, the monthly person's pivot points. The market goes down, it's ahead of earnings, and what does this look like to you? This looks like to me the relative strength is fuchsia. Is that improving? Fuchsia is improving. If the histogram's going up, it's improving. This is the volume tool pointing up. There is some heavy-duty volume coming into the market. As you can see, even from the low that we had up here at around 160 to the low that we had around 137, there was more volume now finally coming in, and that low was weakening. Tesla. And that's what helped us with a beautiful setup and a great trade in Tesla. The indicators, and if you missed it here, you got it there. The volume and the relative strength performance improved greatly, all on the right side. This is your photo finish textbook portrait of what a great buy setup is. Prices fall, they get near a long duration or higher time frame pivot support, monthly pivot. The volume and the relative strengths improving ahead of the rally. So it proves that there's a phrase that says volume precedes price, and this volume indicator is very positive in that regards. So this is a small little company called Meta. Bearish neutral was my call. I can't, and I'm pretty sure my students and those that were in the live trading room might see this video later, but it was the call. And I said, there's a gap in the market here. The implied move, I'm winging this, but I think the implied move at the time, I think it was it 8%, $32, $35, something like that, on Meta. And if you take a look at this price structure, it's moving higher. And remember the chart on that I shared with you, that when prices go up and the relative strength goes down, something's disconnect. If the price goes up and the momentum of the volume's going down, nobody's buying up here. So it was bearish neutral. If the market's truly bullish, does it trade? If the market's truly bullish, does it trade below pivot? No, it trades above pivot. If the market's truly, wait a minute, why is it below pivot and the volume's down and the momentum of the relative strength is disimproving versus the S&P 500? Does everyone see that? A 2 for yes, just to make sure I didn't lose you. So do you think it's something that's a combination, right? It's not like one great setup. It's like there's an event coming and something, if you're going to prognosticate, and it's a binary event. Let's be honest with each other here. Earnings are a binary event. This was not, they didn't have that bad of a report. They beat, they had better subscribers, they had top line beat, revenue beat. I mean, it just went on and on and on until Mark Zuckerberg said, we're going to spend a lot more money. CapEx spending is going to be, I don't remember what it was, 5% more, 7% more than we thought, and we probably won't get a return for a while. And it was like, well, first off, that said that he's going to probably buy a boatload more semiconductors from NVIDIA, probably, right? But that also means that he's spending too much money. He's doing the same thing he did when he got into the virtual reality game and the stock plunged to 100. That's why the stock went down. And that's where it opened up, and that's where it traded, which, by the way, filled the gap. At the end of the day, and this is an end of the day chart after the close, I took this specifically for you guys tonight, right? The volume action wasn't that bad. So I would imagine that in the next couple days, maybe we chop and slosh around. The gap's entirely filled now. There's no, that gap is completely closed up. So somewhere between my 2 cents is around the 418 to, today we closed up at around 41. If you get back and forth, my guess is that people will probably be buying the dip and retesting that low in the next couple days, or if not week. I don't think it's going to go straight back up. But the one thing that I would say is that when the volume turns green and the relative strength turns bright blue, and we're trading back north of a pivot again, that would be a good structure setup to get back on the gravy train on Meta. So this is the QQQ. So the Q's relative to the S&P. The market right before earnings yesterday, nobody's really buying. As you can see, the momentum of the volume's weakening. And guess what? The relative strength's going down. Ouch. Where did it go? Let me ask you this question. If you bought puts up in here and the market opens and drops like a rock, 1.5% or so in the market, and it hits a pivot support, that yellow line, and all of a sudden the volume starts to get less bad, and the relative strength is not getting worse. It's not like getting worse like over here. What is your main thought with an option position? LMO RFN, that's a floor trader's street language for let me out right now. Let me take my money off the table. Something's wrong here. If this market was going to crash, burn, and dive, then volume would not be going into somebody. This indicator clearly showed that somebody was buying the dips today, this morning. All right, as you can see, this is today. Before noon, they were buying the dip. It was going back and forth. And by the way, this is a 15-minute chart on the Qs. NASDAQ 100, 15-minute chart. Clearly, you can see wealth charts. So the indicator, the relative strength, market's kind of going down, and the relative strength's not getting weaker. It's weird, right? So when things don't jive and you go, well, maybe here's my thought process to this as a trader. Cover the position, take a profit, because if you don't take a profit, the market will take it back for you. Number two, you can always get back into the trade if you didn't like it. But in an essence of an option trade, you don't have the luxury of sometimes time being on your side. So you got to take the money when the momentum is there and you're on the right side of the trade. And one of the things that I would say that is helpful, that gives us an edge more so than floor traders had back 40 years ago, is that we have this kind of technology to help us to understand the money flow. Do other people feel as bearish as John Person? If the answer was yes, then we would be getting a lot more red. But the answer is no, we're getting a lot of green. And that's what more likely prompted somebody had more importantly, better insights than John Person, and they started to buy this. And I wasn't stupid. We covered that position, by the way. This is Microsoft. And this is a gem. This is a treat. So riddle me this, Batman. How come Microsoft goes down, hits a pivot support, and look at the volume? Why is the market making a new low and the volume is going positive and it has a bullish convergence? That's not hard to identify, right? Why is the market going down and the relative strength is improving a bit? So the call here is, what are the odds the market gets back to where it was to the pivot point, probably around that 415, 418 level? And so if the market's going to go up, there's a gap in the market. Maybe Microsoft, Bill Gates comes out. Bill Gates does not run the company anymore, but I just like to say Bill Gates. But let's say, for example, they come out and say, you know what, Microsoft 360, we're screwing people left and right so bad they need our product, and they're going to be renting because they need to use Microsoft Word and PowerPoint like John Person, and we got to charge people, and we got the greatest thing since sliced bread going on, and government contracts on the yin-yang, and there's no way we're going to lose money in an election year either. Okay, and so basically for a small risk-reward ratio, a 405 was targeting a realm of reality back to where it was just the day before, up to maybe the 415 level, and that was the reason for the bull call spread and the decision to target. And why, as I told you earlier, why did I target that particular strategy in this environment? So there's a reason why I did certain price structures for the cost that I have to pay and the reality of where the market would go. And also in the case of a broken wing butterfly, what if I'm wrong and it goes even worse? I don't know. What if I'm wrong and it goes even higher? I don't know. In the case of Tesla, it certainly did. In the case of Meta, it certainly did. The Qs, I wasn't really worried about it because it was a 10-wide spread. Microsoft, I'm looking for the market because I don't think it's going to go beyond the realm of reality, and yet here it is at the top end at 415 in the post-market. So these are all actual real trades too that we did, as well as in addition to putting it out for our community. So it has been, I think the tools, and tonight I thought it would be important for people to say, okay, you know, picking one stock is one thing, but having the most dynamic moves of our week and to be on the right side and take the right action and to say, how do you use options as well? And which option strategy would you employ? For the time in the event and with the implied volatility, these are kind of like structuring trades around what I call the realm of reality of prices, getting a better sense of direction. Using the indicators is another thing that's, I think, just ridiculously impressive for me. And I knock on wood. The one bonehead, and I will tell you straight to your ears, Intel was just I should have stopped right there, but I got maybe I got a little cocky. I went 1-to-4 risk reward ratio going out to May 17th. I mean, maybe it goes down a little bit, but what if like the CHIP Act disbursement rumor is true and that news comes out like after this earnings event and the stock's back up to 37, 38, 39? Easily it could do that, right? So that was the real reason behind the trade, not for maybe the earnings. And that's the reason I went with the May 17th expiration. So these are kind of things that I hope that you guys can, whether you have wealth charts, whether you use Thinkorswim, the tools are available. The person's pivot's dynamic, and when markets go down, just like it did here, buying up in here, by the way, look at the high up here. People maybe not realize this, but we were trading in Microsoft near 430 just last month. The stock went down to 386. That's a pretty sizable correction. So if anyone since, let's say, January, late January, early February, missed the bulk of the trade and they've been waiting patiently for a pullback in the market, they got it today. Today they got their little pullback. So the question is, how long will we stay up there, and what will be the condition of that rally? If the relative strength starts to go up and the volume starts to go up over time, again, this is a daily chart, friends, then it kind of signifies that the Microsoft's not going to, this was not a one-day pop and then a flop. So you're going to need a couple more days, and then if that's the case, if we hold up near these highs, my 2 cents is investors are going to clamor to buy dips going into the next quarter. So that means that anything down in this area between 405, 403 will be defended by the bulls who bought it today. So that's important information for you guys for down the road. Any pullback over the next couple days that still has strong volume and the PMC improves is going to be it'll probably stay in this little trading range, and the dips will be defended. So does anyone have any questions at this point? Is there any questions that you have on these indicators? I think tonight's, I'll give you a chance to type out if you did. I think tonight's presentation and last week was culminating to share my work, and he couldn't ask for a little bit better. What do I look for? I look for pivot structure to see if markets get down to certain areas. I also have a little bit more about predicting a market and its percent change in identifying the pivot area and use those levels for targeting my strike prices for options. It's another way that I don't know if a lot of people get into. And the question is, the only one that's not, Boris, available on Thinkorswim is my momentum volume. But what is available on Thinkorswim in lieu of is, and this is Thinkorswim right here, is the on balance volume tool. Good question, and I hope that helped you out. Now, I'm gonna make a little announcement. I don't know if you guys are interested, but we have a special event because a lot of my own community, we are going into a lot different strategies, and people aren't sure, and people are like, why is it a ratio? What's the difference between a broken wing and an unweighted, and certain questions, and when I get into that. So I'm put together, and we have this 3-part online scanning and planning options training program that we're put together. It's going to be on June 12th, June 19th, and June 26th, 1 week apart, allowing people to absorb what I say, ask questions, get your questions answered. We'll probably have all my accounts up, and we'll do we won't be able to do live stuff. It'll be at night, but you'll see what trades we can do and talk about them at the next session. I'll go through and focus on my specific strategies of how I target specific strike prices like I did tonight in detail, what I'm looking at when I go long an actual outright call, or when I use puts, or a vertical, like a vertical bull call spread like we chose in Microsoft, collars, which and many of you don't know, but I manage a small private fund and a bunch of accounts, and I absolutely use options on those positions, especially collars. Now, I got some great trades that went bad. And when I call a great trade that goes bad, it's like buying Target at 108 and selling a 120 call, collecting $2 before earnings last year, and the stock opens up at 132. It's a great trade because I made money, but I got called out of the position by selling a covered call. But it could have gone either way. So, I mean, I'll just give you some real talk, real examples of like, oh, darn. But so not every strategy works out. But I mean, there is an old adage that sometimes you got to be grateful for the winners, right? And you know, it's always great to be the Monday morning quarterback, and it's always great to be. It's easy to call markets after they happen, and a lot of people do that in this industry. Trust me, I'm sure you already know that. But I think that from a real money management perspective, to share with you what I look at for building a portfolio, what I look at for an option strategy, whether I'm doing outright naked long positions or whether I'm using options for hedging. I will go through whether what and when I decide and choose to do directional trades, depending on the implied volatility, what I look for there, and how to spot for unusual volume trades, because that is also very critical. I absolutely was not joking. I believe someone does know a lot more than John Person, and I believe, like, and many of you might not be aware of this, but Morgan Stanley's in a little bit of hot water because they've been selling their book to Citadel. And you know, I find that to be a conflict of interest, and you may too, considering Morgan Stanley owns E-Trade, and there's a lot of general public people trading. And if they're selling their book to Citadel for execution, I'm not saying that, you know, bids and asks get a little bit too wide on trades and they won't let you, like Roach Motel, get in and out of options on their platform, but I think that was something that I don't think they've settled with the SEC yet, but those charges came about, I think, back in January, and you can Google that. What's the point I'm making? There are people out there that know that they're going to lay a big trade down. Maybe it's a pension fund trade. Some people know that they're going to get in for their hedge fund. I mean, there's all kinds of things out there that we, you, me, us in this room are trading against, and we need to get the best edge possible. And sometimes options do that for us. And I just, you know, will share with you our successes of last year, our successes of this year, and we're going to put that together in this 3-night event. It's 2 hours each night. I think you can tolerate me for 2 hours. It's $7.89. The sessions will be recorded and will be available. But we're also doing something that we do every year. So I would like to know, yeah, I probably do. Bonanza, that was a spell check. I didn't use artificial intelligence. Bonsai. Thank you for that. We have in Florida, every year, we do a 2-day live seminar in Palm Beach Gardens, Florida. Great place to be. We call this mini Manhattan now after post-pandemic. Apparently, it seems that New Yorkers fell in love with Palm Beach Gardens. Up the street is a place called Jupiter, where, I don't know, guys like, if you're into golf, you got a couple guys, Brooks Koepka, Dustin Johnson, I don't know, you got, who else? Rory McIlroy, this other guy called, what's his name again? Tiger Woods, I don't know, Lucas Glover, Patrick Cantley, Shane Lowry, Dan Berger. I think the 25 of the top 30 golfers, not Scotty Scheffler or Jordan Spieth, they live in Dallas. They all live up here in either Palm Beach Gardens or in Jupiter, by the way. So I would say a third of the live tournament guys and a majority of the PGA players. So anyway, it became a very popular place. We call it, I think, utopia for some of us. And it's well after hurricane season. But anyway, it's on the website for $3,000. But if you do want to sign up for this and you get in before May 11th for the early bird special, because there's got to be an early bird special, you pay $21.50, and we're going to include one night hotel. But I think because I was planning to do this for a couple of our members, and I offered this as well because it's just, I think, a great package of education to get together for people. If you do sign up to come down here to Florida, the special bonus will be this 3-night event will be a part of your tuition, so you won't have to pay for that. So if you want to know where to get it and what it looks like, I'd like to share with you. This is the link. I just pushed it into the room. Okay, you can go to that link right there. If you click on the seminar, you just click on the photo of the seminar pops up. You will not find the deal I just said anywhere. You can make, you'll find the prices right. You can do a one-time payment, or you can go 2 payments, and they made it easy, 3 payments to come down to Florida in December. And then you'll have the 3-night event as a part of that deal. You do not see that though here because we're not marketing that. But this is on an open mic. It is recorded, and it is guaranteed that if you go with the seminar, you will get the 3-night event and 1-night hotel. And that will be done, or you can call the office at this number right here and talk with Mary, and she will book you and get your order taken for a 1-night hotel. And it's right at the Hilton Garden, Palm Beach. Beautiful place, fantastic time. And I think for that event, it's going to be, it's generally our annual event. We generally get a special guest too, and we have a live trading, and it's a great learning event. So not only that, but I think if you want to learn about how to really seal these, now the live seminar is going to be in December, and that's going to be after the election. But to hold you over, to get you the right information, it's kind of like great information to go for this 3-night event, and then again have the seminar special. So if you're interested, take advantage of that, and this will be we'll start to email market that. So and we have not done that, so I'm introducing that to you guys tonight. I just thought I'd give you that special opportunity. This will not, after May 11th, there will be no free hotel night. There will be no opportunity for the 3-night event to be a part of this package. So if you just want the package of the 3 nights, no problem, there it is. But if you want to come down to the seminar too, the 3 nights involved is the same thing. So that's our special bonanza. It's a bonanza. That's not a bonanza. It's a bonanza. You're absolutely right. My special bonanza. But the bonus is correct. We got that going for us. So it's www.personsplanet.com/events. You go right over to our website right there, and you'll find all out about that. Here's the other thing that we'll go through in that event. We will use TradeStation 2. Many of you are also, maybe you're not, but some of you listening that will be listening to the recording later will know that we have my TradeStation package, and we have our algo program, and we'll go through some of the algo strategies on that. So it's not going to be just a little bit of options on the 2-day event, but it's also going to be our algo programming event. So with TradeStation. So I tend to use at these events, in live trading events, I tend to use the algo program. We go through what the strategies are, and then we go through how to program and change and again maintain the algo strategy. So for TradeStation people, they really enjoy it. For thinkorswimmers, they get, you don't get the TradeStation experience because that's an actual algorithmic trading program with automatic buys and sells and exits with stops that were created, and that's what we cover at that 2-day seminar. But in the meantime, I hope everyone enjoyed the last 2 nights, and I do apologize for the first night last week that was not recorded. I tried to get everything in there tonight. I hope that gave you, it made it worth your while to stick around with me. But bottom line, I can tell you that at the very least, setting your charts up using Person's pivots, I mean, it's not that hard. It's not something new. I didn't invent pivot points. I invented a moving average approach to filter out the pivots. I didn't invent relative strength, but I invented a better mousetrap of understanding the relative strength phase of a market from weakening to lagging to improving and getting ready for a next leg up with improved volume. And I think that's a picture that paints 1,000 words. And if you understand a little bit about bullish patterns and convergences, lower lows in price with higher lows and indicators, again, not all signals are going to work, especially who knows what on an earnings. But boy, the edge and the odds of improvement and using the pivots to target structure of prices for options, it's really a good deal. And I think many of you would agree. I don't know, maybe you could get lucky, but picking Tesla to go up, Meta to go down, the Qs to go down, Microsoft to go up. I mean, Intel, I still got time on that one. But that's pretty damn good shooting based on indicator giving us an edge in the market. That's pretty damn good shooting. And I think the rest of the trades that we've put out, both for our portfolio and the newsletter, also, it shows that it's not that we're lucky. We work hard. And I think Gary Player once said, the harder I work, the luckier I get. And as a matter of fact, I am kind of an avid golfer. I suck at it, but I'm not a scratch player, but I love the game. But anyway, that concludes our time together. I hope you take advantage of the offer. I look forward to helping you in your trading careers, because I definitely tell you, this is a big boy market. Many of you probably would say, yeah, it's been, even for the staunch avid traders, this has been an interesting year. And it's not like last year, and every year is different. It's not like COVID year. It's not like meme stock traders. Every year is different. But, there's one thing consistent with me. It's my work, and it hasn't failed me. And I hope you find value in it and take advantage of our offer. Thanks a lot for joining me tonight, and I hope to see you again in the future at another event. Have a great evening, everyone. Thank you.